Hello and welcome to one of my most favorite programs of the year, and one for which we at NDTV get a lot of positive feedback. I'm of course talking about the Ruchir Sharma show, where he forecasts what's going to happen to the economy and the world in the next year, and how should all of us avoid the dangers that lie ahead and take advantage of the good spots that lie ahead. The big difference with Ruchir's shows is that it's all based on solid research and analysis. Deep data analytics, believe me. Which is what makes him also one of the most successful people on Wall Street. He's also a very successful author of several books, including some on the New York Times bestseller list. In fact, Ruchir wrote a great book on Indian elections called Democracy on the Road. And mark this, he has a new book coming out, The 10 Rules of Successful Nations, coming out soon. Today's program is a little different from the earlier ones. Instead of looking ahead at just next year, Ruchir will forecast the big changes that are likely to happen in the next decade, the 2020s. All these forecasts are based on trends that happened in the decade that just ended. Ruchir, so you're linking what you've learned from the last decade and basing your forecast of what's going to happen or not going to happen based on that.
You know, Prannoy, one of the most fascinating things that I've found in all our research is that there is a very strong decadal pattern that if you look at post-World War II history,
right,
that you find that trends are often defined by a decade. And even though at the turn of a decade, it does not mean that a trend needs to change just because the calendar changes. Mm-hmm. But it's amazing that how that has happened so often.
Right.
Sometimes it's just coincidence, and sometimes it's for some fundamental reason, that there's some event that takes place in the world where the trend seems to change. So last decade, you had the 2008 global financial crisis that marked a huge shift.
Right.
The decade before that, you had the tech boom-bust cycle that happened right at the turn of the decade.
Right. And
the decade before that, again, in Japan, the Japanese bubble burst.
Right.
And the starting of the bubble happened starting on the 1st of January, 1990.
You basically learn from all these changes that you've seen in the past. And your forecast, you're going to link the two 10s with the 20s. Is that right?
Yes. So
okay.
there are some things which will continue,
yes,
but more often than not, the trend changes or at least evolves. And I think that's what we're going to focus on today and why we are doing a decadal run today rather than a yearly run.
Great. And the basic thing is that we are going to go through so much ground because we've got 10 years. So let's get started and go through each of the 10 major trends that are going to happen in the next decade, the 2020s.
Yes.
The first one, and this is all based, 2020s will be based on trends that happened on 2010s. Let's have a look at the first trend. 2010s was America's decade, according to data. America's share of the world economy, just look at this, increased to 25%. It went up. When many people thought that was going to be the end of America, America's share of the world economy went up to 25%. Compare that with Europe. It fell sharply to 15% of the world economy. The whole of Europe, 15% share of the world economy. China surged from around 9% to 16%, almost doubling. Huge surge in China. And India inched up from about 2.7, 2.8 to 3.4. But it inched up. But it was America's decade. Now, moving on, if we look at the impact of this, for example, look at what America's decade meant for returns in financial terms. As a financial superpower, America dominated like never before in the 2010 to 2019. The returns in America, the gains you made on the stock market was 256% in that decade, right, Ruchir?
Yes.
And next, Europe, you're saying 75? That is huge. What a difference.
Exactly. I think that is, for me, is the key distinguishing factor, which is that, as you mentioned, that even China's GDP surged from 9 to 16.
Right.
But what made this truly America's decade is that as a financial superpower, America never sort of dominated this way, as it has come to be.
This is amazing
And
finding.
as a result, today, the American stock market alone is 56% of the world stock market value. So that is a new high for America. So its economy is 25, but its stock market is 56% of the global stock market
And
value.
as you're saying, just you're speaking, China figures you brought up are 72%. That's just less than 1/3 of America. And emerging markets in India, 49%, and India around 46% increase in the whole decade. A huge dominance by America. It's amazing to know. Everybody, okay, America's done well, but this kind of dominance is startling from those data.
Right, and I'll just make one more point here regarding India's data as well.
Yeah.
That in dollar terms, as you can see, the returns were just not that impressive this decade.
Yes.
Very different from what happened in the previous decade.
Oh, I see.
And even for the domestic investor, the domestic investor in India doesn't care much about dollar returns. They care much more about how much that they are sort of getting in rupee terms.
Yes.
But a very important point here, and that's why the dollar returns are also so much lower, that in India, inflation was relatively high. Yeah. So even though it optically appears to us
returns,
that the returns were good, that the Sensex doubled in value in some way over this entire decade, or the Nifty did so well in nominal terms, but if you look at it in real terms, inflation-adjusted terms, the annual returns in the stock market in India were less than 5% a year.
That's it.
That's it. Way lower than what we had in the previous decade. And obviously, as far as America is concerned, because inflation there is so low, the real returns in America were
very close to the
multiple times what
returns
you got in India. So that is the big difference in terms of the return profile.
Now, you were mentioning a very interesting finding again, that each decade there's a different kind of a winner, the big winners in each decade. Just have a look at the big winners over the last 50 years. Every decade had a big winner and a different one from one decade to the next. The decade of the 1950s belonged to Europe. The 1960s belonged to United States. The 1970s, basically commodities rule the waves there. 1980s, Japan, can hardly remember that, but my gosh, they did very well. 1990s was back to the USA, that's 4 decades later. And then 2000s, emerging markets. That's because you were handling emerging markets, right? Some coincidence there. 2010, back to USA. So USA's got 3 top spots there. 2010 we just saw was a huge dominance. And now we're going to look ahead based on these, who's going to dominate the 2020s.
Yeah. And I'll make one point here about this, that what exactly do I mean by this in terms of domination?
Yes.
In all these instances, these markets went up by roughly about 5 to 10 times.
Wow.
In this decade.
Wow.
So a massive amount of gains to be made.
Yeah.
And also the fact that by the end of the decade, it got very euphoric. Everyone thought that this trend was going to continue.
Right.
And then in the subsequent decade, as we will see, that all these trends basically faltered because expectations got too high, complacency built in these countries which were doing so well.
Right.
Japan, as you mentioned, that in 1989, at the peak of that bubble, the Japanese stock market was 45% of the world's stock market value.
My God, really?
45%. So this is what happens, that you get bubbles which build up by the end of the decade, often not every time, but you do. And this is what this tells you, that there's one theme which captures the imagination of the world every decade.
And that question mark, if you know who's going to be the next one, you could gain 5 to 10%. So listen
5 to
carefully.
10 times,
5 to 10 times, 5 to 10%. That's for every week for him. Okay, now the interesting point you also make, Ruchir, is that the person that dominates one decade, if you just have a look, how they just kind of collapse in the next decade. You were talking about a bubble. So the big winner in one decade becomes a big loser in the next decade. Just have a look at the data that Ruchir has unearthed. The winner decade, there's a 600% return. That's your 5 to 10 times. On average, it's 600.
Yeah.
And the next decade for that winner, what happens? Down 11%. The returns are down 11%. So you lose money compared to gaining 5 to 10 times in the previous decades.
Yeah.
Such a change.
Yeah, and these are in absolute terms, in relative terms, because the other assets do go up. So in relative terms, the performance is even worse.
Minus 11 could be minus 50 or something.
Yeah, in relative terms,
because
in fact, it's minus 75.
Minus 75?
On average. Wow. That's how sharp the relative performance
others
tends
have gone
to be.
up, so you're saying 11% just on your own, but compared to others, minus 75.
Minus 75.
Wow, what a change.
On average.
So it's almost like we've never seen anything do the same decade following 2 in a row. So
dominate the world at least.
Yeah. So what's the first top trend of the 10 top trends of 2020s? Number one, what is it? America will peak and the rest of the world will rise again. Now, rest of the world could be, that we are yet to see, could be Europe or could be Asia, emerging markets, but it won't be America.
Yeah,
and that's a big thing to say because it's 56% of the stock market.
Yeah, because it all feels the best at the peak. When things are going really well. America today, this is the longest economic expansion in America's history, which goes back nearly 200 years in terms of data.
Right.
The unemployment rate in America today is at a 50-year low. So the whole idea is that this is about as good as it gets as far as America is concerned. And at some point in time, in the next year or two, when you have the next recession in America, I think that's when things will change. And the rest of the world will emerge stronger after that. Because so many countries, from Europe to even India and even Japan, they're being forced to clean up the mess of the last decade that has been created here. And once that is done, then those countries will be in a better position to start doing well.
What is so amazing about this kind of analysis is that this is the time when everybody thinks America's doing great, just focus on America, go for it. But you show that at its peak, you should worry.
Yeah, because remember, if we had done this show a decade ago, and that's really what, and we did speak about this, and I wrote about this extensively, at that point in time, the world was crazy after emerging markets. BRICS was supposed to dominate the world.
That's because you were in charge of emerging markets.
So they were supposed to dominate the world.
You misled everybody.
All the projections were in terms of
a linear. You've always been bullish about America in this decade.
Yes, that's right. So that was my basic conclusion when I wrote my first book in Breakout Nations, which is that I was very skeptical of the BRIC domination and thought America, because of its technological prowess, could be the winner of this decade. Now, of course, I wish I had followed my own advice more, but now here we are.
Everybody follows your advice and you don't follow your own. Chalo, theek hai, I understand. Let's go on to the second top trend of the 2020s. Now, that's to do with big companies. First, let's link it with what happened in the 2010s, the last decade that's just completing. Big companies got bigger and bigger. Look at the share of the top 10 companies and how it grew from 2010 to 2019, from 9% to 14%. Now, that is actually a huge increase in real terms.
I mean, because this is the share of the world stock markets.
Yes.
That the top 10 companies were 9% in terms of their value of the global stock markets. Now it's at 14%. This is back to close to the highs we saw at the peak of the tech bubble in 1999-2000 when a handful of companies dominated. In India too, the large companies got larger, especially in the last 3 years. And the top 10 companies in India, in fact, today are 55% of India's stock market capitalization. So also very big in India. But in the difference is that in India, it's always been the case. It's gone up again the last 3 years, but generally the top 10 have dominated.
Dominated much more than the rest of the world.
Yes, than the rest of the world, even the rest of the emerging markets on average. But now in the world also we have seen this increase where the top 10 companies are dominating.
Does that mean that there's more inequality in India?
Well,
if the top 10 is doing so well here, so much higher.
That's right. That is a sort of
one of the
effect of that, but we will come to that in greater detail in terms of what exactly does that mean in terms of rising inequality.
So let's move on to what this actually means in terms of what happens in the next decade to companies that have done well. Just have a look at this. The top 10 stocks of any decade actually struggle in the next decade. I mean, that's a huge change. Look, for example, what happens in the percentage gain of the top 10 stocks in one decade. 2,100% gain in a decade. That, to be a top 10, you have to have that type of thing. But the next decade, just a 65% gain. The same stocks, 2,100% down to 65%. So one has to be very careful of just saying, oh, it's doing so well, let's invest in it, because the tendency is you're doing terrifically, you're going to collapse in the next decade.
So the 2,100 number here is important to explain, which is that this is about the top 10 companies today, which are like in the world. Like how much have they gained? But the important thing is that 9 out of these companies were not there in the top 10 at the beginning of the decade. And so therefore this gain is huge. But once you're in the top 10 at the end of a decade, then the subsequent decade, this goes back again to my big theme of this discussion that we're having today, that the winners of one decade are really the winners of the subsequent decade.
Are the losers of the subsequent decade.
Yeah, in terms of that they end up becoming losers, in fact, are really the winners.
Yeah.
At both a country level and at a stock level, we see this pattern.
Actually, the next bit of data you show is really an eye-opener for me. Let's have a look at the top 10 companies over the last 5 decades, and you just see the churn. Churn is the norm. If you're on the top 10 company in one decade, you're rarely, if ever, 1 in 10 chance of being in the top 10 in the next decade. Top 10 companies one decade are almost completely different in the next decade. Look at 30 years ago, Exxon, Walmart, etc. And then 20 years ago, very few left. Microsoft enters and Walmart is the only one that's still there.
And General Electric, just 2 companies.
And General Electric, 2 companies there.
Yes.
Then 10 years ago, basically it's Microsoft still there. So that is, and then today, a completely different lot, but Microsoft. So Microsoft 3 decades, and frankly, this decade it's been in the top 10 because of Satya Nadella.
Right.
It was plummeting down to 300 billion, and he's brought it up to 800 billion. You know the figures better, but something like that.
Yeah, but you can see the churn here, which is that.
Yeah.
I think a lot of people are really surprised by this, which is that that of the top 10 companies in the world today, 9 out of these top 10 were not there in the top 10 at the beginning of this decade.
That's
tells
amazing,
you about the incredible amount of gain. And some of these companies wouldn't have even been in the top 100 of the rankings at the beginning of this decade. That's how significant the gains have been, but also a cause for concern, because many of them now are quite expensive after having appreciated so significantly this decade. And they also sort of have to deal with obsolescence that comes about in some of these industries.
Right. I think the fascinating thing is that 1 out of 10 survives in the top 10. I mean...
Yeah, in any following decade.
Yeah.
That's right.
It is just an amazing churn. Now, those are the big companies. But what about the smaller companies? Are they likely to do well, badly? Ruchir, let's have a look at what you say about that. Small companies, in fact, you say, are likely to rebound in the USA. And whether USA is a signal for the rest of the world we'll come to. But small companies have rarely been so depressed compared to large companies, relatively. Just look at this. The percentage gain of large companies versus small companies. Large companies in America gain 230%. Small companies, 110. That is less than half. And in India, let's have a look at what happened in India in this last decade. Large companies gained 115%, small companies 6%. So that, rather than worrying, is a signal, because small companies, large companies historically have done, in fact, often small companies are better than larger companies, but this decade's so bad, you feel they could rebound.
Yeah, because one thing we also look at, this is more from an investing perspective, are valuations.
Right.
And the point here is that the valuations of these small companies, not just in the USA, but in emerging markets, in India, the valuations of these small companies relative to the large companies today is also quite depressed. Compared to the history that we look at.
Yes.
So I think that's another fundamental case to be made as to why small companies could do better. Now, there are other reasons too. It just won't happen because of valuations. It's also because I think the business environment could get more conducive for small companies. It could be easier, given the platforms you have today, whether it's Amazon, others, the large companies, but the platforms also provide some of the small companies to gain market share more rapidly.
Large companies around the world will not do so well.
Yeah.
Okay, may not.
On a relative basis.
Relative basis.
Yes.
So let's look at the second of the top 10 trends for the 2020s, for this coming decade. Number 2, let's have a look at what it says. New big companies likely to emerge. The existing top 10 are unlikely to be there in the next decade, and smaller companies may be beautiful again. Small may be beautiful again. That's lovely. So it's just a return to what has been in the past. I mean, this depression of smaller companies is unusual.
Yes, that's right.
It's really bad this time.
So I think there are 2 parts to this. One, in the top 10, we're like, if history is any guide, then when we do this show 10 years from now, and we look at the top 10 companies...
Don't worry. We'll just say tick, tick, we got all right.
9 out of the top 10 companies are likely to be different than the list we see today, if history is any guide. And similarly, I think that a lot of small companies is where the winners will emerge more compared to the large cohort.
Right. Let's now look at your third top trend of the 10, and that's about tech companies, how they've really ruled the roost in the past decade, 2010s. Tech stocks really ruled in 2010s. Just have a look. Global stock market returns, or gains if you'd like to say. Technology shares gained 325% in that decade. Let's have a look at the next one. Consumer goods, way lower, 200%. Financial firms, 100%. Wall Street didn't do too well, huh? And commodities, which we had a decade of commodities, if you remember that chart, just gave returns of 30%. That is really a big change.
Right. And I think that people sort of forget, but if you go back and read all the financial literature from a decade ago, people were saying the opposite.
Really?
Like the consensus was that we are in a commodity super cycle, that commodity prices have to increase. The world has...
Commodities, explain what they are.
Oil, copper, aluminium.
Right.
Those were the hot companies of
right.
the 2000 and 2010, that
right.
decade.
2000 to 2010.
Yes,
correct.
that's right. Correct. And now what we have seen is that it's been a complete flip. The same chart in 2010 would have looked the opposite. Commodity companies up 3 to 4 times, and tech firms would have done nothing.
My God.
So churn is the norm, is again the message when you look at the world from an industry perspective.
And in fact, as you were saying, if you look back 10, 15 years ago, you would have said BRICS, that's the future. And just look at what happened to BRICS versus the FANGs. Now, we won't tell you what BRICS and FANGs are. Ruchir will. Well, FANGs are all the tech companies. FANGs, in fact, unpredictably were the new BRICS. Just have a look at the difference between the two. The stock market gains or returns, FANGs gave 634% returns. And BRICS, 37%. BRICS are Brazil, Russia, India, China, South Africa. And FANGs are Facebook, Alphabet,
Netflix
and
Amazon for A and G for Google, because now of course it's like Alphabet. But in terms of the broad picture here is this, which is that, and we spoke about this I remember the middle of the decade, that the world loves acronyms. And FANGs became the new acronym to define the decade. Whereas in the 2000s it was BRICS. So technology took over, and these emerging markets gave very poor returns over the past decade. So,
and they were the hot topic 15 years ago, right?
Yeah,
BRICS.
10, 15 years ago, as you know, BRICS, and people are coming all sorts of acronyms linked to new emerging markets. Instead, it's the tech which dominated.
The FANGs, it's a bit kind of nasty, FANGs. Okay. But one worry you do see in that, and let's have a look at this worry, that tech flourished because they were free of government regulations. And that could change. Anyway, let's have a look how the government regulations have affected different industries. Manufacturing, there are 215,000 government regulations. We're talking about the United States.
Yes.
In finance companies, 128,000 regulations. In media and telecom, 99,000 too many regulations. There should be 0. And in tech, 27,000. So 27,000 compared to 215,000, much more freedom, much more ability for entrepreneurship and development. But you say that may change?
Yeah, because you see the political pressure building now. The political pressure is much more about how to regulate these tech firms because of issues with data or issues to do with privacy. So
or
the pressure
monopolies or dominance, etc. Why can't politicians just leave us alone?
But I think that the opposite's also going on, which is very important to say. That especially like in America, there's a lot of deregulation which is also going on over the last few years. In fact, one of the regulations that the business community likes about the Trump administration is that it put into place that for every new regulation you bring, you have to take out 2 others.
I see.
And that's something which I think that even in India, it's worth doing. So it's it's not just about regulating tech, but it's about deregulating the other sectors.
But we have a jugaad system. We'll put in one big regulation, take out 2 tiny ones. But 1:2 ho jayega. Jugaad, the Indian jugaad system.
But a lot of businesses do sort of say that the deregulation is helping the other industries now, whereas tech is facing increased risk of... So
that's true. You do get a lot of pressure to say, they're over dominating particular markets and all kinds of
people even speaking about antitrust
privacy,
laws. So this is a long drawn-out process, but that pressure is building.
Quite right. But you've noticed that big techs are slowing down. It's already happening. If you just have a look at, quite startling how big the slowdown has been. If you look at the last decade, you see growth rates are dropping in terms of number of users, in terms of market share, etc. Just have a look at this. Active users on Facebook are down. The growth rate is down 48%. Now it's at 8%. Snapchat 92%, down to 16% growth rate. These are active users. And Twitter 72% and no growth rate in 2019. That is a worry, big worry.
Yeah. So
of course, there is a base issue
effect,
here.
But
they're much smaller at the beginning.
But that's why even the returns get less impressive from here.
Right.
Because you
become
want big,
growth.
you already sort of mature, and so the returns become. So this sort of ties into the earlier point that after a great decade of growth, returns do slow down.
Right. So overall, to summarize in a sentence, the number three top 10 of the top 10 trends is this. Number 3 is that the potential fall of big tech. There is a potential that big tech will fall. And that is, everybody's saying tech is the future. So that's quite contra indication for...
Well, tech could still be the future, but the companies that even dominate it are likely to change.
Right,
and we again go back, that that list we had earlier seen of the top 10 companies. Back in 1999, at the peak of the tech bubble, just like now, 7 of the 10 largest companies in the world were tech companies. But apart from Microsoft, the other 6 names you are unlikely to even remember, including like the Cisco's of the world, which were on that list. A lot of them have underperformed since.
Yes.
And Nokia was considered the hottest mobile company.
Yes, my God.
Until then. And it doesn't feature on any list today at all.
Yes.
So the issue is the fact that it's not just about tech. It's about the companies which dominate today, face competitive pressures and obsolescence. And so therefore these lists change. And we've seen that between the 2 tech booms that we have witnessed this decade, this past decade, and the one in the 1990s, how that's changed, with Microsoft being the only survivor.
So let's move on to your 4th top trend. Now this is about deglobalization that's been happening, and we've all read about it, but here actual data on how much deglobalization there is and how this could impact the 2020s. In the 2010s, the deglobalization was pretty severe. After booming, global trade boomed for a while, then it had just peaked and it's on its way down. Just look at the figures. From 30% to 60% from 70 to 2008, and then it's just come down. So that 30, 60 could have gone to 70. Instead of 70, it's 56. It's coming down. The trend has changed. That's the key there.
Yes. So I think that this is the share of global GDP, that for a long time we thought the global trade was bound to keep on increasing. And it did.
Yes.
You had this hyper-globalization in the 80s, 90s. And this is just to do with trade. But when it comes to other factors of globalization, we've seen a reversal on many fronts. We've seen it on capital flows, even people flows. Migrant flows have slowed down because of all the anti-migrant sort of rhetoric that's picked up. Even in terms of digital flows, now we're seeing ecosystems being developed which are independent of each other, US and China building independent ecosystems. So this is all part of deglobalization that's happening.
Trade deglobalization, is it also to do with something else, Trump, isn't it? The deglobalization, attacking China.
That's right. I think Trump has accelerated it. Yeah. But I think it was happening before that
anyway.
too. It was a trend anyway. We started speaking about this even before Trump came to power, that the number of countries which were putting up protectionist measures, including India, Russia, all these countries putting up protectionist measures, this started happening pretty much after the global financial crisis of 2008.
Right, and coupled with this and linked to it is a kind of period of lack of trust, era of distrust. Just look at the difference in how people trust large brands, the rising distrust of large brands. This is what's happening. The percentage of people who don't trust large corporations and their brands used to be in 2012, 30% didn't trust them. And now, in 2017, that's gone up to 45%. That's almost half. And maybe by 2019, when the final data comes out, it could be high. Huge distrust. Now, why is that happening?
Well, I think that it's happening at multiple levels. One of the big reasons why this is going on is because of nationalism. So I've seen Chinese surveys on this.
Right.
And they say that one reason that they will not like to use more US brands is because of the increased hostility with the United States.
Right.
So we're seeing that large multinationals are going to come under this threat, which is that across borders, because of the nationality, you find that there's distrust building.
Is distrust building in America as well, though, for their own companies?
Yes.
I mean, especially the tech companies.
Absolutely. So that's been a really big change, which is that 5-10 years ago, the tech titans were all celebrated as these good billionaires, as sort of creating this wealth. Now, in fact, if you look at publications such as The Economist, they put tech billionaires among the bad billionaires. So this is the big switch which is going on and reflected in this distrust of large brands, especially global brands.
Right, and your nationalism part has kind of given a boost to local brands and natural products and something indigenous. Just have a look at, in fact, what's happening in India. India, you've seen a rise of local natural products. Now, what does that mean? Just look at it. Percentage market share of local brands in India in 2010 was just 8%. It's more than double now to 17%. So this is, again, against multinationals and people with corporations with huge finances, but nevertheless, our local brands have begun to do well. Here you've taken a simple average of toothpaste, shampoo, skincare, etc. But this is a trend.
Yeah, so in terms of, like you said, here much more of local brands now, and I think that it's partly to do with nationalization, and that's how you have some companies even advertising that way, saying that you should buy our brands because these are locally manufactured. So I think that there's some powerful resonance to saying that the goods have been made here locally, and much greater belief also in some of the local ingredients, Ayurvedic and other things. But I think that this is a really big change which is going on.
Yeah, and again global, but it's certainly hitting India as well. Wonderful. I mean, it's actually a positive, I don't know.
Across products.
Yes, across products. Another area which is slightly different, but localization of data storage. So if you look at data localization, that people want storage of data locally, it's increasing every year. Let's look at Ruchir's data on that, the research that he's used for this data. Data localization is on the rise. Protectionist policies that require data to be stored locally are going up. The number of policies. If you look in 2010, there were about 45 policies, and now 85. That's nearly double. So this whole trend that it's got to be within my country, you can't have it outside, part of nationalism and part of surveillance also.
Right, and protectionism. So this is all coming together. So we spoke about deglobalization, and now we spoke about localization. So it's all sort of coming together in terms of...
My worry is that this is more... Politicians say we want to be national, but actually politicians feeling we need it for surveillance.
That's obviously something which politicians will do.
Come on, speak out. Yeah, man.
In terms of what's convenient for them.
Okay, so the summary of the fourth of your top 10 trends of the 2020s, number 4, is that there's deglobalization, and that's making way for localization. And that's we've seen even in India. And it's quite a big change. So you're talking about localization going into the 2020s as a major new thrust. It's already gone up quite a bit, and that's going to carry on?
Yes, I think so, because as I said, that these waves which come of deglobalization, they tend to last not just years, but decades. And the rise in nationalist sentiment, this is also something which seems like an enduring theme. So if you're going to have deglobalization, you're going to have nationalism, more protectionism, all these, I think, are likely to support local brands much more than global brands.
Right. Moving on to number 5 out of the top 10, and this is a very important point that you highlight a lot, and that is the shrinking working population. People who can go out and actually work, that growth rate is dropping fast, and that affects the growth rate of the economy. Just look at this. People of working age, that growth rate is slowing around the world, including in India. In 1950 to 2005, 8 odd, the average growth rate of the working age population was about 1.8. Now it's down to 1%. You know, that kind of drop in population growth rates is huge, much more than people actually, the figures just appear. It's a huge change.
And so different from, again, the narrative of the 70s and 80s, and which I think many politicians including in India, are still stuck with, that we need a population control policy. But as we'll see, that everywhere we're seeing a huge decline now take place in the population growth rates and
working age.
Yes, resulting in a big decline in the working age population growth rate, which are people between the age of 15 to 64.
Right.
And I think that this is something which is so underappreciated.
Yeah.
That there are two drivers of economic growth.
Right.
The number of people who come to work
Right.
and their productivity.
Yes.
That's just a very simple economic equation.
Right.
And they typically, historically, both have contributed to economic growth in equal measure.
Right.
So if your population growth rate of the working age population in particular is going to slow down, or nearly half.
It's going to affect your growth rate,
it's going to
GDP
affect
growth rate.
It has to affect your economic growth rate.
Right.
And I think that switch people haven't made as yet.
Yeah.
We keep speaking about the growth rates, whether India wants 7-8%, or even China wants 6%, or US, Trump speaks about 3, 4, 5 kind of percent growth rates.
Right.
Those growth rates with these kind of population trends we have become impossible to achieve, and we refuse to accept that.
We have to shift our whole attitude to what is possible, giving this drop in working age number of workers available.
Yeah.
And you don't think productivity improvements through tech will compensate for that drop?
We will see why not in a bit, but so far there's no evidence, is that the productivity increases have been somewhat disappointing given the tech boom that we have seen. People talk about data quality not being measured properly, but I think it's got to do with other trends, as we will see in the show.
Okay, globally, people of working age growth rate is dropping, so you're having fewer people joining the workforce. India too, just have a look at it. It's not quite the same as global, different figures, but India is no exception. Working age population growth is slowing in India dramatically as well. If you look at the growth rate of the working age, it used to be about 2.5% a year. It's now down to 1.4. Now, globally, it's 1, from 1.8 to 1. Here, it's 2.5 to 1.4, which is also a dramatic change in India.
Yeah. We forget here in India, too, that in the 1960s, the average family, the fertility rate, the number of kids that they would have, would be about 5 or 6. Now we are down to about 2... a bit above 2 in terms of average.
Huge change, yes.
So it's a huge change that's taking place. So you're having both in terms of birth rates going down, and people are living longer, but the birth rates have really, really declined in India as well. And if you have a working age population growing at just 1.4%, it is extremely difficult for your economy to grow above 5 or 6%. That to get the balance from productivity
is very tough.
And that's what we've seen with other countries too.
What was actually another startling factor that you unearthed was that it's not growing at 1% or 1.5%. There are many countries where negative growth rate, the working population is going down. If we have a look at what Ruchir calls depopulation of the working age, people of the working age. Depopulation is falling in many countries. Working population is falling in many countries, dropping. It's a negative growth rate. Let's have a look at the working age growth rate. In 1985, only 2 countries did the working age population have a negative growth. In 2019, 42 countries have a negative. It's not that it's slowing down, it's minus.
It's contracting.
So
in 1985, those 2 countries were, I think, Afghanistan, Somalia, basically who cares, right? And now you have an instance where these 42 countries include China, Japan, Italy, Germany.
Negative.
Russia.
Contracting working age population.
So I think that this is a huge change that's taking place and something we still haven't quite appreciated.
The opposite of the demographic dividend.
Or the demographic boom. Or if you remember, the population bomb.
Right.
That was the big theme of development economics in the 70s and 80s, and even
First
in India.
It was the bomb, then the dividend, and now, man, you have to worry.
It's the depopulation bomb.
Yeah, depopulation bomb. So based on that, as you were just saying, with a slowing growth rate in working age population, is it fair to expect an economy like India to grow 7, 8, 9% like China used to? According to Ruchir, that has to change. You cannot expect that kind of growth rate anymore because of a smaller growth in working age population. Just look at what the new benchmarks should be. These are new benchmarks for economic success. If you achieve these, you're doing well, man. Fewer workers will actually mean slower economic growth, as you just mentioned. So, for low-income countries, expect something around 5% as a successful growth rate. Wow, it's no longer 8, 9%, or double digits, it's 5, and be happy. Middle income countries, 3 to 4% is very good, and developed countries, 1 to 2%. And you're happy because you got negative there. A lot of the countries you mentioned were, whether it's shrinking, were developed countries.
Yeah. So if you go back to a decade ago, the number of countries in the world which were able to grow at above 7%, or which were growing at above 7%, there were about 40 such countries in the world which were registering a growth rate of above 7%. 40.
Right.
In 2019, there were only 8 to 9 countries in the world which registered a growth rate of more than 7% of the 190 countries for which data is tracked.
8 to 9.
8 to 9 compared to more than 40 which were there in a decade ago. So a massive crunch of that. And those 8 to 9 were mostly the small African countries where even I don't know how much to trust the data, but whatever it is like very small. So it's become extremely difficult in this environment to grow at a rate of more than 7%. And yet we keep thinking our benchmark for economic success needs to be 7%, 8 to 9% growth, and we sort of make all sorts of projections of $5 trillion economy based on these kind of projections. But that is just unrealistic, is my feeling about this. Now, if India truly gets back to a growth rate of above 5%, the problem is the data quality. We don't know what the true growth rate as yet is as far as India is concerned.
There is genuinely global worries about Indian data quality because it never used to be. We used to be, all of them are Bengalis and we're damn good at statistics, man.
But the government itself is now acknowledging that. They've set up a committee, I think, to look at the whole point that what exactly...
But there's global worry about this.
Yes, and like in terms of the fact that people do question, because there's such a big disconnect between the real-time indicators you get and also what the headline GDP numbers are.
Right.
So most important point here is that if India can genuinely get back to a growth rate of 5% or more, not based on today's data, but the corrected data, I think that would be a fairly good achievement. But we are still some distance, it seems, away from that.
So, as you put it, that India's economic growth, the rank globally is dropping badly, and that's a big worry for us. Just have a look at this. Economic growth, in those terms, India's rank around the world is dropping sharply. Here's India's rank. Just have a look. In 2010, India was the 14th best or fastest growing country in the world. 2019, India's 44th best. And that's if you take the data as authentic and genuine at 5%.
Yes.
Or 4.9. If it's actually 2% less than that, we'll be 80th or 90th.
Right. So, so I think that that's what's
14
happened.
14 to 44th is a shocker.
That the growth rates have come off so much, and so have our rankings.
And growth rates come out without taking into account correct data.
Right.
Even with this worrying data, it's still come down from 14 to 44. That is a shocker. So let's have a look at the fifth of the top 10 trends globally for the 2020s. This is what it looks like. Number 5, depopulation marches on. We're talking particularly about the working age population. So expect a world with a slower growth. So change your benchmarks, shift your mind. Forget 9, 10%, now go back to 5 for poorer countries.
Yes, that's right. And for developed countries too, like the US economy is basically growing at 2%. In terms of the average growth rate. But at 2% plus economic growth, the US looks like the best in the class, which are the developed countries, with an unemployment rate which is at 50-year lows.
So, and now, I must say, US has a huge base. So 2% means
but even in the US,
significant.
Until 5 years ago, a 2% growth rate was considered very disappointing. So this is the new reality, which they seem to have adapted to much more now.
Don't you have to say that we have to pivot to a new normal? Isn't that the phrase used in their narrative?
Yes, that's right.
Pivot to a new normal.
Yeah.
Say it, be a millennial. Oh, you're not a millennial, sorry for bringing that in. Let's move on to number 6 very quickly before Ruchir sidetracks us. A new generation rises. This is, Ruchir's generation. And that is causing a marked change in the kind of consumer spending. And this is fascinating, how things are going to change because of a new generation. The Gen Z, which is under 21 years, there are now 2 billion of them globally. As far as the millennials are concerned, these are 22 to 37-year-olds, almost 2 billion, 1.9 billion. So between them, huge proportion of the world is now dominated by these younger people. Moving on to Gen X, which is 38 to 53 years, 1.5 billion. And then to move on to the baby boomers, the best people of the 60s, 1.1 billion. And then, which it's a standard term, the silent generation is 0.3 billion. So 0.3 billion. So that is the silent, which I think is an ageist term, and you should never use it, regardless of what others do. However,
this is not my term.
Not your term, thank God.
This is
Quickly
just the
disown it.
definition.
But give us the basic point that these data shows.
Yeah. So I think what this data is basically showing is the fact that we're seeing this big shift in consumer trends, which is happening on the back of this, and something which I think is going to define the coming decade. We're already seeing that. Like, one thing that I hear so much from is that there's a big demand increase in experiences rather than owning goods now. The people would rather spend on experiences rather than buying, rather than materialism. I think that this is a big shift that's taking place.
Right.
And we will see some of the trends now on the back of that. So,
Well, one of the things that we hear all the time is that people want to take Uber, why buy a car?
Right.
Which used to be the main thing that everybody would buy a car, but Uber now, and why you can use Airbnb instead of renting a hotel. So tastes are changing because of also new technologies and new systems.
Technologies, and also sort of new consumer habits in the way that the younger people, in the way that they their desires are. We'll see this throughout the show.
Right.
That in terms of what they want, I think that is shifting and redefining consumer trends.
I'm going to now just go back to really objecting to not your term silent generations over 72 or something. How many of your top 3 or 4 presidential candidates for the Democratic Party are over 70?
Well, even
Biden,
Trump is. So
Biden,
that's
Bloomberg,
right.
78.
Yeah, so not too
They're
silent.
not silent, man. They're really movers and shakers. We'll change that to movers and shakers. Okay. Now, fascinatingly, what Ruchir finds that because of this new generation, there's new favorite pastimes. Let's have a look at this. The world has a new favorite pastime, and this is the new generation impact. Gaming is now the biggest. Look at the global market size of gaming. Compared to music, which is $17 billion, films, $88 billion, and gaming, $138 billion. Now, everybody knows, you see kids playing games all the time, but bigger than music and films combined, that is a shocker.
Right. And I think it's also got to do with the fact that this is another result of much better technology.
Right.
Whether it's got to do with phone penetration or the internet penetration, and also the quality of what's coming out.
Right.
And this is the big transformation, that the music and films, you can argue how much the quality has improved. The consumption of these, the quality has improved in terms of what you see, the technology and stuff.
Right.
But in gaming, the improvement has been incredible compared to the games that we used to play 30 years ago to the games that we are playing today. So I think that, but this really is something which is so underappreciated, that this now is the world's new favorite pastime. The amount of money people are spending on gaming, even though only about 1 in 3 people in the world today still are on to gaming.
You mean the silence don't game?
That's your edit. But in terms of what they do, it is still the fact that it is dwarfing now so many other industries.
That just came as a real eye-opener to me. And if you look at how much people are actually spending, as Ruchir mentions, just look at the data on this. More money is being spent on gaming than any of the other pastimes, more common pastimes. Revenue per user per year for Twitter is about $8 per user, Facebook $19, Google $27 per user, and look at Fortnite, which is a game, $96. That is like mind-blowing. And the one thing I think you also mentioned is that if people are playing games, how are you going to improve productivity?
So this came back to the earlier point, which is that you asked me that what's happening to productivity. And this is one of the things I think economists are looking at, which is the so-called productivity paradox. That why are we not seeing a bigger increase in productivity given the fact that we have technology everywhere around us, which should be productivity enhancing. And this is partly the answer, that if you're spending more of the productivity, or the technology on building better games,
Right.
and the consumer habits are shifting, that's unlikely to increase productivity, even though your experience is likely to get better.
Yeah, I mean, like, it's such a big distraction, but it's not only technology, it's what people love. They love it. And look at, it's happening in India as well. Huge change in the number of gaming companies. The gaming boom in India, just have a look. The rising number of game development companies in India. In 2010, there were 25, now 275 companies are making gaming apps.
Yeah, this sort of industry is growing at 20% or more every year. So you want a secular growth industry, gaming is where you're seeing this.
And interestingly, in India, the number of games downloaded is the highest in the world. And there's so many different people are trying all kinds of games. Just have a look at the number of games downloaded. So part of the gaming booming in India is number of games downloaded in India is highest in the world, as we just mentioned. 58 games are downloaded in India. USA 53, China 30. That came as a low surprise to me. And say another country, Turkey 21. So India 3 times Turkey, double China.
Yeah, this is what happened in the previous calendar year. So just in 1 year, the number of games that were downloaded, apps, as you can see, India tops that chart as well.
Wow, real shock. I mean, you do know it, you've seen people using it, but these kind of figures are just
India
puts it
and
in
global.
perspective.
So the world truly has a new favorite pastime.
So what is top trend number 6 out of the 10 top trends for the 2020s? Number 6 shows that the new generation simply equals new consumption habits. In fact, amongst that, gaming surges ahead of films and music. That is a huge change. Does it worry you?
Well, I think we all have to, as you said, pivot to this
to the new norm in the narrative.
To this new trend. And I think that that the opportunity is there, which is that the amount of mind space going on gaming, the monetization is still not taking place. Pretty much like the internet, if you remember, like a decade ago.
Right.
That's where the attention is moving.
Wow. Let's move on to number 7, top trend out of the 10 top trends for the next decade. And this is about populism. 2010s, the decade just gone by, populism surged. Populism of the left or the right. The votes of populist parties rose sharply, both left and right. Just have a look at it. Look at that graph over the years. There was an increase in the 1940s, just before the war, and then it's been flat, and then suddenly, 2018, the number of populist parties that are getting support, left and right, but probably more to the right in terms of support, has gone up very sharply.
Yeah.
It's a big change.
Right. And this is sort of happened all of the last decade. More importantly, it is what's the impact of this?
Right.
That even if it peaks, it'll take a long time for things to normalize, as you can see. So I think that the impact that this is having on societies, on so many economic and political trends, that's what I find even more significant.
And be interesting, and I think the next bit of data shows the difference between left and right in this populism surge.
Right.
There's what Ruchir defines as increasing polarization in the world. The world is divided like never before. Polarization is deepening. Now, just look at the percentage support that any president in America has got from the opposition's base, meaning if you're a Democrat president, how many Republicans support you? And if you're a Republican president, how many Democrats supported you? Kennedy, who was a Democrat, 49% of Republicans ranked him favorably. If you look at Nixon, 34% of Democrats ranked him favorably, even though he was a Republican. Look at Reagan, 31% of Democrats looked at him favorably. Look at Clinton, down to 27, so it's going 49, 30, going down. Clinton, 27% of Republicans looked at Clinton favorably. Look at Obama. People forget, Republicans could not stand him. 14%, only 14% of Republicans ranked him favorably. And look at Trump, now down to 6% of Democrats rank Trump favorably. That is a terrific trend downwards. Polarization. If you're a Democrat, I will not look at a Republican. If I'm a Republican, I will not look at a Democrat.
Yeah.
A
And
divided country.
For the US, we have this great data, but I suspect this is exactly the trend worldwide.
Yes.
Possibly like in India as well.
Right.
That it's become such an ossification of the voter basis that it is so difficult to sort of get any crossover now.
Right.
And that's why even calling elections has become so difficult, including in the United States, that the favorite question that anybody asks today is who is going to win the election in November in the US.
Right.
And I think the betting market sort of has it right. It says it's 50-50. If you look at the betting market, right? There's a marginal...
That sounds like you. Safe pay. Anybody else?
I've always said that.
50-50. Anything could happen.
Anything could happen.
But Bengali genes.
But in terms of, if you look at it here, which is that in America too, the polarization is such that just 4 to 5 battleground states in America are going to determine what's going to happen in the election.
And the rest are totally polarized.
And the rest have already decided. So if you do a tour of America to figure out what's going to happen in the elections...
Just go to those states,
Just go to these 4 to 5, and they're relatively small states. And 10 to 20,000 people, which way they switch in those 4 to 5 states is likely to determine the entire electoral outcome. So good luck to pollsters to find out who those...
Well, let's have a look at exactly what you're saying. In your next bit of data, you found that increased polarization of the society, a divided society, has actually also meant hardcore support increasing and therefore less volatility in your support base. Look at, for example, Trump's rating are lower than historically presidents have had, much lower, but they're stable. Historically, the support pattern for former presidents used to be up and down all over the place, but for Trump, much lower than that, but more or less flat. Republicans are not switching to Democrats, Democrats are not switching to Republicans. Easy for pollsters.
But see what, this is so significant that for other presidents, including Obama and before...
You're not using presidents as a pun, right?
Right. In terms of the fact that the swing in terms of the low approval rating and the high approval rating during their term would be about 30%.
Yeah.
When they were doing well, 60% approval ratings. When they're doing poorly, about 30% or so. That's roughly
huge
what the
change,
what the sort of swing
as
would be.
People swung back and forth,
swung back and forth, less and less so, but they still swung back and forth. In Trump's case, his approval rating has literally moved in a range of plus minus 2-3 points
of
40%.
Yeah.
So no matter what's happening, you get impeachment trials, or you get the entire fuss which takes place, or what's happening on the border, anything can happen, and the approval rating moves by just 2 or 3%. It's as good as a dead man's heartbeat, this graph.
Amazing, actually. And based on that, the summary of point number 7, the trend number 7 out of the 10 trends, is as follows. The world is divided like never before, but this polarization likely to have peaked.
That data tells you that, which is that how much worse can polarization get? When only 6% of Democrats are going to back a Republican president, and 91% of Republicans are going to just back whoever's their president. How much can this rubber band stretch more? The spread is already down to just 6 points. And so I just feel that we could be at a stage where we see some move again towards rationality and centrism, but maybe that's an optimistic take. There's no sign of it so far, but it just seems that this
could also may actually develop some common ground as people say, look, what are we fighting about in such extreme measures?
And so little gets achieved then when you sort of have that, because you know that both sides are going to attack each other, or if they come to power, they're going to reverse each other's policies.
I just want to add, do you think a lot of this polarization is based on the most emotive emotion of hatred?
It could be that in terms of it, but it's been progressing for the last 50 years. So I would like to believe there's one factor behind it, but I think this is something which we still haven't and of course people
But you see the big drop in Obama and the increasing drop in Trump, and Trump a lot of it is based on hatred of immigrants, of different, not true Americans, etc. And you see that in India as well. So this polarization, hatred helps polarization.
Yes, I think so. Much more tribal loyalties possibly built first by television, then by social media.
By television?
So these are just factors that we can try and guess as to what's leading
It's not
to
television,
this
it's all gaming.
It's all game.
Gaming by politicians of a different kind. Okay, let's move on to more financial things now, interest rates and inflation, etc. Let's have a look at what kind of interest rates one can expect based on the past. In 2010s, the last decade, we've seen the lowest interest rates in 800 years. These are real interest rates adjusted for inflation, which is the right thing to do. But that's amazing. So if you look at real interest rates, just look at that. They're really they're negative right now.
Short-term interest
there
rates,
was
yes.
one little, short-term interest rate. There was one little equivalent in 1965, but at the moment, nothing like in the 800 years.
Yeah, so money to those who can sort of access it is extremely cheap and widely available. And that's also one reason why financial assets around the world have done so well, especially stocks, including in places like India, which is that even if the fundamentals haven't looked that great, people with such low interest rates feel compelled to sort of invest in assets such as stocks because they don't get much in the
bank, or the bonds or whatever,
right? In terms of, because if you adjust for inflation, the return out of the bank accounts basically is close to zero, so or negative in many countries. Right. So that's what's sort of leading to financial assets doing so well, and also I think to the fact that we have this period where money is so easily available to those who can access it.
Right, and that translates into inflation. And if you have a look at inflation globally, look at inflation in India and how it has changed over 10 years. Low inflation in India, globally it has been, and in India. But how it has changed is important. India's inflation is still high compared to global levels. Just have a look at this. 10 years ago, India was 161 out of 190 countries in terms of inflation. Really bad inflation. And now it's still at 145. I mean, there are 144 countries ahead of us with lower inflation than India. So that is not even halfway mark.
Yeah, but I think that this tells you 2 points. One, that inflation across the world has collapsed. Because India's inflation rate, when its ranking was 160, was 9 to 10%.
Right.
Now India's inflation rate is closer to 5%, the headline inflation rate. And yet our ranking hasn't improved that much.
Yeah.
Because globally inflation has completely collapsed.
Right.
So this is what this tells you now.
But it also tells you that even though you've gone down to 5%, don't be all thrilled about it, because globally it's even better.
Yeah, that's right.
Yeah, okay. Let's move on to what's going to happen in the 2020s. This is what Ruchir, based on analysis of the past, inflation may come back. Now, to what extent, we'll discuss in a minute. But here are the signs. Number one, global unemployment rate at very low right now, pushing for higher wages. Next, if you look at productivity growth, as you mentioned, people are gaming. What do you expect? Anyway, productivity is low growth for various reasons. And the global government debt, which is something you've been stressing a lot over the last decade, in fact, is at its all-time high of 90% of GDP. This is just government, not all total debt in a country.
That's right.
90% of GDP, unprecedented.
Yeah. The only time when governments, including the United States, have had such high debt levels or run such large budget deficits in normal peace times is, or rather, never in peace times. It's basically been when they've had a war or something. But this is possibly the most controversial forecast, I would say, of all the 10 that we're going to discuss today, because there is no evidence of inflation in the world today.
Yeah, that's when you make forecasts, not after it's over.
Yeah, so there's no evidence of it, and a lot of people will be sort of saying that so many economists have been calling for higher inflation back on the back of low interest rates, and it just hasn't transpired. So why should it happen now is going to be the skeptical calling for that. And my feeling is the fact that because now you have such a resources constraint which is building up, that you could finally begin to see some inflation break out.
Right.
And when that does happen, it'll be a huge event, because people are so used to inflation rates only falling. So this is a very important and yet possibly the most controversial of the 10 forecasts.
For us, it's not controversial. Anybody says, why do you think inflation is going up? It's not going up. We'll just say, Ruchir says so. Simple as that. 8th out of the 10 points. Number 8 of the top trends of the 2020s. Inflation may stage a comeback. And that affects behavior a lot and what you should think of doing and where you should invest, etc.
Yeah,
So
because gold, for example, could be the big winner in that sort of environment.
Scenario. Interesting. Gold could be important.
Yeah.
Okay, let's move on to the second last one, number 9 of the top 10 trends of the 2020s. Number 9, where we're going to talk about the falling fourth estate. Fourth estate, of course, is newspapers and television. And people are getting news less and less from newspapers and television. The percentage you get news from television has dropped from around 80% to around 50% of the people. And print from around 50% to just 15% now in the last 20 years. That's a huge decline, a huge change.
Yeah, so this is, I think this trend is well understood, that we're seeing the decline of the traditional media, but that it just continues unrelenting, it's accelerating. I think that is something which, we will keep on have to adjust our business models to. So This is what's really going on. And again, the important implication of this is that it's giving way to what Mark Zuckerberg, of all people, calls, obviously, the rise of the fifth estate.
Fifth estate.
Which is that we've seen such
online.
Online, social media. And he calls it the fifth estate because there's such decentralization now of news dissemination, that it no longer now is about who controls it. Anybody with a Twitter account becomes an opinion person. Anybody on Facebook and Instagram is able to sort of communicate and visualize what they're feeling.
Huge democratization of the news. Spreading of news. Like if you're good, and we have so many, even in India, that are individuals who are doing so well. Dhruv Rathi, for example.
That's right.
Amazing. Now, so the rise of the fifth estate, just have a look at that. Fifth estate meaning online news, getting your news from online sources. This is what it looks like. In USA, percentage who get their news online used to be 12%. It's now 52% getting their news online predominantly.
Yes. And the same trend is happening across the world. As we'll see in emerging markets too, such as India, that we're seeing a much greater increase now in people who are...
Let's have a look at India. This is the data that Ruchir has researched and found about India. What percentage are now getting news online versus newspapers and television? Young India in particular gets their news online. Percentage of Indians under 35 years of age who get their news online rather than television and radio, 56%. And look at it for print, 16%. Youngsters are not reading newspapers, and television, 26%. Now I want to make a very strong statement here. NDTV is the fifth estate. Organization. We are moving completely digital. We have been doing for the last year or 2 years. And .com, you're right, is growing rapidly with 200 million unique users. Sorry, a little bit of advertising. But I'm just saying, we're just part of the Indian trend.
Yes, that's right. And I think that this is something which is going to accelerate with the generational change as we spoke about. So that really is the common theme of the top trends, which is that the generational trends as to how they're shifting and shaping consumer habits.
And Twitter in particular you focused on for a while. And look at how Twitter users, how many of them actually use Twitter to get news is amazing, and how it's rising. It's a rising source of news, Twitter. The percentage of Twitter users who get their news from Twitter, 52% in 2013, just 6 or 7 years ago, 59% in 2016, and in 2018, 71%. That is amazing that Twitter is predominantly now being used for news.
Yeah, that these are people who are getting the news primarily from Twitter, in fact. So I think that this is something
they go to Twitter for news, not really for chatting with others or finding gossip on it. News.
That's right, yeah. I think that you will see that even amongst all fellow journalists and stuff, that's become the main source
and fellow
of news.
presidents like President Trump. Right. He's transformed Twitter for news or non-news or alternative facts,
Yes, alt news.
So now alt news. Let's have a look at the 9th in the top 10 trends of the 2020s. The fifth estate, that's online, rules in the 2020s. That is a big change. Mm-hmm. And amongst that, gaming again, it's part of that same kind of phenomenon.
Yeah.
More democratization, more worrying. There are worrying aspects to it, of course, online.
Course. Yeah.
Curation. But you say curation is coming back a bit.
Yes, I think that...
Curation meaning people explain what you mean by curation.
Right. So what we've seen over the past decade is proliferation. So much of data, so much of news, which is hitting you. I think that we're seeing a trend now of much more curation, where people are, and this is being facilitated by artificial intelligence, AI and stuff, that people now sort of want to be told what exactly to read, how to curate stuff. I think that the trend is taking place, and we're seeing a lot of tech development take place towards that, because there's just so much data around the world. In fact, a bulk of that has happened in the last couple of years. So I think that this is the new trend now on curation.
Right. Let's move on to the 10th and final, and then do a quick overview of all 10. But the 10th and final is a fascinating one. The amount of inequality in the world and in India kept rising in 2010s, in this past decade. Just look at some of the figures. The number of billionaires as an indicator, this is global, went up from 1,011 in 2010 to 2,153, more than double the number of dollar millionaires we're talking about.
Yes.
And if we just quickly look at India, it's, of course, they're smaller because it's only one country versus the globe, but the increased percentage is about the same, more or less doubled in India. The number of it's the age of billionaires in India too. The number of billionaires in India have gone up from 49 in 2010 up to 106, so also doubled. Now, this kind of trend indicates greater inequality. Few people are making so much.
This is one way of looking at it.
Yeah.
There's so much controversy regarding the inequality data. How do you measure it?
Right.
Like, have you included income transfers? Have you included
Keep
all sorts
it simple,
of welfare?
man. Yes.
So in terms of, but this is just telling you.
Yes.
And I think that it's also more than whether inequality is rising or not, or by how much is rising. It's also the perception.
Yes.
That I think this entire perception is there about the top 0.1% of the world is sort of dominating, and they're taking a disproportionate share of the wealth. And this is what this data is
and you
showing.
say because of this, I mean, they're very, everybody's focused on these few billionaires around the world, and there's a bit of a backlash. So let's look at the backlash that Ruchir is talking about. It's building around the world. There's increasing demands for more equality in our society, financial and wealth equality. And indications, you're saying politicians around the world are bashing millionaires and by name.
Yeah, and we're seeing this in the US too, but it's a very funny situation that you have a billionaire entering the Democrat field but not gaining much traction. And you also, like, obviously have Trump as a billionaire, but on the other hand, the left wing of the Democrat Party is actually naming billionaires now in terms of, and that would not happen before. So this is
that's a very kind of indicator that they're identifying and wanting something done. And apart from that, there's pressure on them for increasing calls for new wealth tax, for free college and for healthcare.
Yeah, so I think that we're seeing a shift now much more towards redistribution. Of course, in America, they call it a shift away from Wall Street to Main Street. But I think that we're seeing this sort of thing. Now, some people can call this populism, some can call this whatever policies you want. But the pressure is clearly building that something needs to be done to redistribute some of the wealth rather than just to create it.
And then the third point that you mentioned, Ruchir, is that millennials are focused on promoting socially and environmentally sustainable investing. Millennials and Generation Z very worried about the environment and all this backlash. They want much more billionaires and corporates to pay much more attention to social projects, right?
And something that we're seeing in the financial industry as well, which is that these funds are being launched now, which are targeted towards this. So the strongest growth we are seeing now are in funds which are, like in India, they call it CSR or in
corporate social responsibility.
Yeah, and in the US, it's also called ESG, sort of, or social impacting funds. So I think we're seeing this trend now.
People want investment in areas which have social good.
Yes, social good, or they want the companies that you're investing in to be screened for those. That how good are they on those scores, and if they're not good, how much you're engaging with them to try and bring about change.
When I was traveling a lot around California and the Silicon Valley, one of the things, and I felt very proud, everybody was talking about Indians are now making great CEOs. Why? Because they have both a head and a heart. And the new trend globally is that you must not just be whatever it takes, I'm going to win. You must also have a social message, a heart. You must look at all the aspects, other aspects of developing an organization. And Indians have a head and a heart, just like you.
Yeah, that's great to hear that.
Yeah, and Satya Nadella and Pichai, and
Right.
they've proved they've got a
successful,
heart, they're very sensitive, and they've done so well as a result. And that's even at smaller levels. Indians are becoming CEOs.
Right.
I won't ask you which job, which CEO you're going to be of, some
Right.
social organization.
Yeah.
Definitely. Right. Okay. In terms of the next aspect of this pressure or the backlash against inequality and pure capitalism, you call it moral capitalism. The 2020s, Ruchir says, you're going to see a rise or the pressure on more moral capitalism. In capitalism with morals, the percentage actually, if you look at people who want corporates to work for social change, and this is what it looks like. Global average, 73% are saying we want not just pure profits. Think about society. And in the US, it's about 74%. In India, it's 81%. Of course, we're a poor country. Poverty is very visible. So you want people to affect that poverty and change. And I think one of a few countries that's higher than India's, Mexico, that 87% want investment in social change.
And this is not just to do with absolute numbers, it's the trend that every year we're seeing
Right.
that this number is going up. So,
Right.
by about 8 to 10%. So the same snapshot from 5 years ago would have shown the numbers to be closer to 50, 60%.
Right.
Now it's gone to 73%.
Right.
So it's almost becoming the norm now that you have to do both. It's not one or the other.
I'm going to say something which is absolutely based on no data. When we were young, the boomers, we had a lot of social objectives, demonstrations. Then it seemed to die away with your generation. And now the Gen Z and the millennials
Bring it back.
are bringing it back a little bit. Maybe not so much the millennials, but the Gen Z, the really younger
Yeah.
lot seem to be more involved in society and saying not just pure capitalism, based on hard data.
No, but it's backed up by this data too, that
Sure.
a consistent trend that we are seeing here is
Because
this.
the more and more youngsters are coming in also.
That's
Yes,
right.
yes,
So,
yes.
why is this happening? The push is coming from them. Like
So
in
we
the end,
had
the
a gap
marketplace-
generation. Instead of calling you guys the whatever it was,
Gen X.
Gen X, you're
Right.
the gap generation. Not the silent, the gap, and the two socially conscious generations on either side. Shocking. What you're saying is going to happen in the next 10 years is you're going to see the rise of moral capitalism. That's what you're saying. Moral capitalism, by that you mean capitalism with a social conscious. Yeah?
Yeah.
And you're seeing that happening, and that's going to
Yeah, the seeds of
increase, you
that
feel.
have already been sown, and
Yeah.
now I think it's going to mushroom as things
Right.
develop this decade.
Right. It's a good area to think, if you're going to invest, it's both good for society and good for returns.
Yeah.
I mean, it's that double whammy you get.
Yeah.
Yeah.
Yeah. Double benefit.
Actually, a lot of, even in the Valley, any new project startups, they like to see an idea that has both a social impact and a profit impact. It's
Yeah.
not, it used to be just profit.
And it's particularly strong in Europe. It's the strongest from there. When I travel the world,
Right.
I think that in
Europe
Europe
is
you
the
see
most.
the maximum demand that even of pension funds and other institutions, they are actually asking their investors,
Right.
how much are you doing on this front?
Right. Got it. Okay, let's very quickly go through all 10 and then I won't say what we'll do after this. We'll have a Nimbu Pani. Okay. The top 10 trends of the 2020s. Here's Ruchir's number one. Ruchir, America will peak, the rest of the world will rise. The American economy has done brilliantly 2010 to 2020, 2019, and now it's going to peak.
Right. This is again forecast. It's hard to know if it's going to happen in 2021 or 2022.
Yeah, but you're saying for
but
the
I think
decade,
that, that if history is any guide,
Right.
once a country does so well,
In one
particularly
decade-
from an economic perspective and even more so from a financial perspective, the subsequent decade tends to be disappointing at least. So it's not as if it's the end of America,
Yeah.
but maybe even a pause to refresh. and the other economies which have gone through such a tough period over the last decade, cleaning up the mess partly because of the boom of the 2000s, those will stand a better chance of re-emerging.
Re-emerging. Point number 2, the second trend of the top 10 trends of the 2020s is that smaller companies may be beautiful again. Explain why and what to expect in that.
Yeah. As we saw from the data here, which is that churn is the norm. So we're likely to see new winners emerge in the top 10. But more importantly, I think the fundamental conditions are coming in place where some of the smaller companies may do better, partly because of the other trends that we discussed, whether it was localization, deglobalization, rise of nationalism. The environment is shifting in general towards smaller companies doing better after they have done so poorly.
Yeah, because they always used to do as well, but they have had a bad patch, so you think they could go back to the norm.
Yes, that's right.
Pivot to the earlier...
Pivot to the trend line.
Yeah, correct. Okay, point number 3. If we look at the third trend out of the top 10 trends, the best days of big tech companies are over. By that you mean the big tech companies have done so well in this decade, and you've seen companies top 10 don't replicate in the next decade.
That's right.
So these top 10 could be, they're vulnerable.
Yeah, vulnerable in terms of the fact that they'll be around, but their returns at least are likely to be disappointing.
Right.
And that's what we saw after the 99-2000 tech boom as well, that the 7 of the 10 largest companies in the world then were tech companies, like the case today.
Right.
But of the 7 of those 10, only 1 was able to survive in the top 10 for a long period of time. And every other company faded, and not just faded quite sharply after that.
Amazing, actually. Okay, number 4, point number 4, trend number 4 out of the top 10 trends of the 2020s. Here it is. Deglobalization will make way for localization. And you've already seen slight indications that that trend is going to continue?
Yes, I think it's just started. So we're seeing that the market share gains...
just started.
That the market share gains are a lot. Now, once again, these are forecasts based on what we're seeing at a fundamental level. And it links into the other trends, that if you have deglobalization, you have more nationalism, you are likely to see much greater protectionism as well, which helps local companies rather than global brands.
Right, they're all linked in that sense.
Yes.
Okay, now trend number 5 out of the top 10 trends is as follows. It says that slower growth rate, new norm is going to be slower growth rate targets because of a decline in the growth rate of the working population, either a negative or a slower growth rate of the working population. Working population is going to not grow as fast, and productivity is not going to compensate. So don't expect 8-9%. If you're 5, genuine 5, not fiddled 5, genuine 5, for a poor country, you should be happy.
Yes. For emerging markets, the new definition of economic success, as I say, 5% economic growth. For a middle-income country, if you get to about 3 to 4, that's what I say in China when I go there, that listen, 6% is not going to be achievable anymore. You get more than 3 to 4% economic growth, that's very good. And the United States, and even more in Europe, you do more, 1 to 2% even, that's great. So, and there's one point I'll make here, that per capita income becomes a more important measure of success now, rather than just GDP growth rate. And this is very true in Japan. Here's a fascinating statistic that I'll leave you with at this point, that in per capita income terms, which is in terms of not just GDP growth, but in per capita terms, US, Japan, and Europe have grown at roughly the same pace over the last 20 years.
Wow.
So it's basically the American advantage.
And people feel per capita.
That's right. And the American advantage has a lot to do with superior demographics. And in Japan, despite virtually no headline economic growth, why there's been no social unrest? Why there's not been greater angst?
Because
it's partly because in per capita income terms,
they're
still doing okay.
It's also one of the greatest countries in the world, Japan. Yes. Anyway, let's look at point number 6. Trend number 6 in the top 10 trends of the 2020s. The new generation that's coming up will determine new consumption patterns. And one of the things which is mind-blowing is gaming as opposed to films.
Yeah, that's the world's new favorite pastime, as we say.
Amazing.
Yeah,
but much more than that.
Yeah, but that's a common theme that, as you can see in our top 10 trends, which is that the rise of the new generation, the millennials, the Gen Z, I think that they are redefining many consumption patterns. They want more experiences rather than owning goods and other items. and also in terms of how they're spending their time. I think that they're reshaping these patterns, and as we'll see, how they're consuming news. So this is another big common trend, whether it's deglobalization, rise of the millennials, depopulation. These are themes which I think pervade all our top 10 trends.
So they're looking at ndtv.com rather than just NDTV.
Much more.
Much more, right?
Yes.
And we're a millennial, Gen Z...
driven company.
Driven company, right. I wish. Okay, point number 7. The world has never been more divided, polarized. But polarization cannot get worse. It's so bad right now. So you see some improvement.
I'm hoping so, because that how much can you stretch this rubber band?
Right,
Exactly. It's already at an extreme.
Almost
When you have a situation where 90% of the Republicans will support Trump regardless of what he does, and 6% of only Democrats will support him no matter how the economy is doing, it just tells you that how much worse can it get from here. So I'm hoping at least that there's mean reversion here, but so far it's polarization at its extreme.
Now, point number 8, inflation may stage a comeback. Inflation may stage a comeback. It's been a good decade for low inflation, but now it may stage a comeback.
Because inflation has been trending down really since the early 80s across the world.
Right. But you're seeing a lot of signs that
there's some signs that this may eventually come back just when everyone's given up on it.
Right.
And often trends shift when everyone has given up on it.
Yeah.
As I said, that this is the forecast which is likely to be met with most skepticism and the most controversial one.
Right.
But a safe bet, I would say, is to have some gold in your savings, right? In terms of in your portfolio. Because if inflation does stage a comeback, then gold tends to do quite well in that kind of an environment.
Number 9, the fifth estate, that is tech, is going to rule the 2020s. But it may not be the same big companies, but it's again the link to the younger generation, Gen Z, the millennials, etc.
Yeah. A shift of balance of power, that it's become much more decentralized now, and the traditional media is also being forced to adapt itself, but some are doing so quite successfully as well. I don't want to undermine that. I think that if you look at some of the leading publications in the world, such as the New York Times, the Washington Post, they've been able to pivot, as we put it, in terms of this sort of new environment. But that's really how things are shifting, and you have to adapt to that. But there's one other thing which is coming through here, is also, I think that a somewhat countervailing trend here is about curation. That as you get so much of this...
By curation, explain exactly. You mean you want somebody to filter and not give you all the rubbish.
Or not somebody, maybe machines even, as in AI, but something which is able to curate for you as to select based on your own habits as to what you're going to like and what you're going to dislike, rather than sort through the mess yourself.
Okay, the final of your top 10, I think is fascinating, is the rise of moral capitalism. Capitalism with a heart, capitalism with a social conscience.
Yeah.
And that's again pressure on politicians to change and billionaires to change.
Right, and the pressure once again building, both because of the perception about income inequality and wealth inequality, and also because millennials, the younger generation, that's what they care for more, that they want companies, they want to focus much more on other goals rather than just profit. Now, of course, it's you want profit at the end of the day, but you want these other objectives also to be met. So the pressure is building bottom up.
I will just put it that it's the return of the wonderful people of the 60s. We had 50 years of gap, and the youngsters are back to the youngsters of the 60s. Thank you very much, Ruchir. That's absolutely fascinating. For once you worked hard in your life. Thank you very much.
Every year, yes.
Every year.